Marty, I'm going to cut to the chase because I did the Silverstein Properties math. I went to given property, 116 John Street. There are 416 units. There's 2 vacancies. How much are rents going to go up this year when the math is there's 414 apartments rented and only 2 empty?
Well, it's a great question, Tom. Thanks for having me on. You know, we just purchased this property the end of December, and it was 99% occupied. So obviously, we're hoping to see rental growth. And New York City is really on a comeback. We have a larger portfolio in New York City, a couple thousand units. And that whole portfolio went down to 68% occupancy when we were usually in the 98% range. And then that whole portfolio came back quickly.
Right.
So.
Yeah. Okay, well, that's great. Lisa from the Upper West Side emails in and says, Marty, you didn't answer Tom's question. Are rents going to go up like a normal rate, 2, 3, 4%? Or help Lisa out here. Are we going to see 10% rate increases?
I think rates already did go up a lot, and I think they'll continue to rise. I don't know if they'll spike as much as they did.
Marty, what about in the office space? I mean, we're talking right now with people who are coming back into the city, but we still, I mean, we're in Midtown here, and you can see all of the empty storefronts. Are you still optimistic that you're going to see all of those offices actually filled, or are they going to get repurposed into condos as well?
Well, I don't think you'll see as much offices being repurposed as into different things like that. But offices will come back. People will occupy the offices. I think it's slow to come back because of all the different variants, but you'll see people back in the offices. We started to see them come back in October and November. The Delta variant had slowed it down, and then it started to pick up again. Omicron is slowing it down again. But I think in the middle of this year, you'll see it pick up again.
Marty, one theme of New York City has been that it has rebuilt itself again and again, both figuratively as well as literally, with new development projects. I wonder, though, given the Omicron variant, given how much the pandemic has rejiggered people's notions of work and play, are you still planning on building 2 WTC, that World Trade Tower that you've been holding off on?
Yes, we will definitely be building 2 World Trade Center, and the market definitely will demand it. We're seeing higher rents downtown. We're actually hitting $125 a foot now, which is a number that was unheard of. And our 3 World Trade Center building is almost completely filled now, and that was the last of the new buildings to be built downtown. So we're very happy with the energy and the demand that's going on downtown.
Marty, there's been this huge shift in the meantime, though, to suburbia and also to other smaller cities and, frankly, to Florida. How much does that have legs, or do you feel like that trend has been peaking as people realize that they miss their old lives?
Well, the corporations want to be where the talent is, and the talent wants to be in big cities. So I think you'll see all the corporations flock back to the cities, and that's why we haven't seen any major users give back tons of space. I think people will be using the space differently, but I think that they'll still be using a lot of space. And I think all of the talent which wants to be in the cities, because that's where all the services are, that's where all the arts are, that's where all the amenities are and the entertainment, I think they'll continue to thrive, and I think the office space will continue to be built.
Marty, you've been on both sides of the real estate world and gathering funds, bringing them in, for example, at Goldman Sachs, and now on operations and investment at Silverstein Properties. Give us a window into the effect of the big tech companies. Today's headline is Facebook down in Austin buying, I don't know if that's your unit, but buying zillions. I think the square footage is about the size of Rhode Island. But Marty, help me here with the big tech companies and how they've changed your world and, frankly, our world.
Well, it's interesting. Tech companies coming to New York didn't want to be in glass and steel, and now they're in glass and steel. So it's very interesting to see that, because we've got Uber and Spotify in 3 World Trade Center and 4 World Trade Centers, respectively. But the tech companies need to be everywhere. They need to find that talent. And they can't just go to Austin and find 7,000 people, because there aren't 7,000 new people to find in Austin, even though there are people moving to Austin every day. So they need to go to the bigger markets, too. That's why you'll see Facebook and other very large tech companies expanding in the larger markets like San Francisco and New York and Boston and Chicago. And so you'll continue to see tech thrive in bigger cities.
Marty, throughout this show, we have been talking about the new rate regime that we're heading into. That the Fed is going to be forced to be much more hawkish and raise rates more significantly, with Bill Dudley, former New York Fed president, coming out and saying the Fed funds rate should probably peak out around 3 to 4%, and they have to move quickly. What would that do to your property world?
Well, look, we spent the last 2 years refinancing a lot of our properties. We did over $5 billion refinancings, assuming this was going to go up. But with the rise of rates, we'll also have the rise of rents. So when we're underwriting, we're also assuming that rents are going to go up because that's what's happening with inflation.